Welcome to today's video. We're going to talk about the economy. What happens if it crashes, crumbles or whatever? What will that mean for our Bitcoin and how you can actually grow your Bitcoin by using a different platform which will allow you to trade indexes for Bitcoin. I'll see you in a sec. So welcome to today's video. Now let's look at YouTube first. It's good to know what people are talking about. If you put in the likes of recession, the economy collapses and all kinds of stuff, there's a lot of new information, a lot of interest, and quite a lot of these videos are from like a year ago, a lot of them are from 2 days ago. There's a lot of, there's a lot of scaring going on when it comes to the prices in the economy. Credit, for example, credit crunch, demand, industries, all kinds of good stuff, but we don't physically know what's going to happen with our asset, do we? So let's look at a few things that are happening. So German recession looms as industry orders drop more than expected. So when there's a recession, it usually means supply and demand. They're not making enough for what is demanded by the people. People basically shit themselves and they stop spending. So for example, the car industry, right? Back in 2008, 9, 10, there was problems with the car industry, massive problems, because people didn't want to buy cars and they're like, oh my god, what's all this? And it's all scaremongering on the media terms. And ultimately we are going to look at a chart and we're going to show you a few little index funds that are quite interesting to know what happens with the technical side of it when things do go wrong. And we know that, but the fundamentals are, Germany are huge. They're a powerhouse in terms of industry. Cars, for example, we all know the makers, BMW, VW, etc. Massive element of car manufacturing. And they kind of, they're expecting a bit of a downturn. And they've already said it fell by 0.6% previous month, with demand of capital goods down 1.6%. The overall fall compared to the consensus for a drop of 0.3, so it's doubled in the consensus element, which is quite scary. But I think there is problems. When you look at Donald Trump, for example, he tweets, he says certain things, and he drops the market or he picks it up. I think he is holding the market up. We are due a fall, and when companies start looking at their stock prices and they start looking at certain elements like that, there's going to be spending habits will change and people will change, especially when the media cover certain things. So interesting to look at the whole market. Now another thing as well is the UK. Okay, only recently Thomas Cook went out of business because they didn't adapt to current market climate, i.e. they had a load of stores that people walked into. They didn't really do the online stuff that much. And this again, it's showing that there's been a bit of a fall in the last quarter. And you kind of got to look at certain things with the UK, which is a problem. Brexit is always going to get the blame. The weather is always going to get the blame. But, more often than not, you find with the UK, it's not too bad. People do come here, they do spend money, but we've got a lot of old businesses that are going bust. There's problems with old businesses. The House of Fraser, for example. You've had Woolworths in the past. You've had, obviously, Thomas Cook. Debenhams have had financial problems. You've also got the likes of Pizza Express having financial problems right now. So when you look at the high street in the UK, there's always going to be problems with the economy. Same in America, same in other countries as well, where you go around and you see JCPenney shut. You see big, massive stores, which were globalized brands. Everyone would go to them, don't tend to bother. There's obviously problems with certain elements, and probably the online market is a contributor, but so is the media. Anyways, let's get on to what I want to talk about realistically. This is the Nasdaq, okay? One of the big, obviously, financial trading platforms out there, big index fund. Most charts look like this in the stock market. The monthly chart looks like this. So that's the Nasdaq. Let's have a look at the FTSE.
A few minutes later.
So this is the UKX, this is a FTSE. I got it wrong the first time, idiot. But, when you look at this, you think, well, this was a recession, this was a boom. And obviously since then we've been okay, realistically, when you look at where we've went from recovery and stuff like that. But there's so many different index funds out there that you need to look at, and you need to have a little look in the Dow Jones as well. What goes up, guys? We know what happens. This was the old recession. Boom, fucking hell. And where we've went from there, okay? Interesting to know. We are due a come down. Now, when you look at this, in the Dow Jones especially, when you look at this, you think, well, where could we possibly go? Well, we're about to drop at some point. We've had a few little scare drops, and there've been some big ones at the end of last year. There's been a few big ones at the end in part of this year as well. But when you look realistically, what could look like a possible destination on any sort of like recession retracement? Well, we all know that what goes up does come massively down, and you got to look at the previous like bull areas, and you can argue, well, look at from this point of view here, went down to that point there. Now this one obviously a bit different. It went way beyond the previous trend. It just depends on where you're looking at it. So it's interesting to look. So will this mean that Bitcoin will be used as a possible area of wealth? Well, we don't actually know this. Bit of history, Bitcoin came out of the previous recession, the 2008, 9, 10 recession essentially. It was there to kind of go against the banking system, the centralized reforms of credit, all that banking control, people overspending on lending essentially. That was it, simple as that. Banks were like, yeah, we'll give you a mortgage, okay, can you pay for it? No? Okay, we'll give you it anyways. that sort of thing. And this allows you to be your own bank, but we don't physically know what's going to happen. And, the spread of the 2/10-year bonds is inverted for the first time in 2017. That usually means that there's a recession, usually, like when you look historically. But we don't physically know what's going to happen with Bitcoin. Will people use it like they use gold and expect gold to rise and expect a lot of movement in a lot of markets if there is, going into next year, a possible reduction in prices of the stocks, the indexes, and most importantly, media coverage. Media coverage will scare the living shit out of people. They will. And I know it will happen. You'll see it all the time. It'll be constant. It'll be all the time. It'll be constant. Don't spend this. Don't spend that. There's a credit crunch. There's a recession. There's a global economic crisis. What will people do? Well, they'll shit themselves, first of all. They'll have to go and get some toilet roll and wipe their ass first. But fundamentals are, people will move their money into reserve funds. Gold, as an example. Other indexes that are a bit safer and more liquid to move. And possibly Bitcoin. Now, I've said it. But we don't know. That's me just saying speculation. But what I will say is this. If you want to trade it, and you want to trade this market, check out Prime XBT. Why? If you're hedging that you're still a holder of Bitcoin, you're happy with holding Bitcoin longer term, why not trade the index funds, gold, for Bitcoin? That's the obvious answer, right? So Prime XBT, I've not really covered it much in terms of other videos, in terms of what other assets are on there. And I've already went through the Nasdaq, the Dow Jones, the FTSE. They're on here too. In reality, I don't think the Dow Jones is, but ultimately, you've got the Nasdaq. I've just showed you the Nasdaq chart. They've got the UK 100. I've just showed you the UK 100. They've got the German one. They've got the SP 500. They've got the Hong Kong index. They've got the Australian 200, the Japan. They've got crude oil and Brent oil. These are massive, massive globalized funds, indexes where you can put wealth into, because naturally people tend to move their stuff. They've also got forex pairs, foreign exchanges. But you can bet your bottom dollar that when the Nasdaq comes down, SP 500 comes down, the FTSE 100 comes down, you're going to start seeing some movement and volatility in gold and silver. Why not trade them? Short ones that that fundamentals, oh God, the monthly chart looks a bit rough. Let's see where this goes. And when you look at the charts, you look at the likes of the Dow Jones, even on the weekly time frame, there's a lot of few little random spikes here. And these are real money makers. Index funds, you require a lot of leverage and margin. But if you've got Bitcoin, you can kind of play around with it anyways. You don't need to do KYC, okay? You don't need to fiddle around. You don't need to spend a load of money on getting these. And obviously, this is just a Bitcoin chart. But you can literally go on to the UK 100, okay? And this is a FTSE chart at the minute. This is a 1 minute time frame. You probably won't want to look at the 1 minute time frame, but the daily time frame, you can kind of see what's happening. A lot of gaps there to be filled. But the fundamentals are, you can trade this. With enough liquidity and enough margin in your account, you can trade this. No bother at all. The Nasdaq, essentially. Again, you can see it. It's all there for you to look at. You know, it's literally all there. And you can trade this. Literally, you could trade this. No qualms whatsoever. Grow your Bitcoin with it. So, when you're looking at financial crisis and all these kind of scaremongering, you need to be ahead of the game. And being able to trade it without worrying too much about it and being in the know helps. And being on a platform where you can trade your Bitcoin and also see the current prices of the other markets makes it a lot easier. And I would highly recommend get on the likes of Market Watch or something like that and just go on Market Watch here. Great website, absolutely unbelievable, and this will tell you exactly what's happening in the market and what's looking quite ugly. And at the minute, the Dow's looking pretty rough, and it could open pretty bad. And you could argue, well, yeah, you could argue a lot of things today. We had a decent day yesterday. In reality, today may not be the same. Now, there's also news about the Hong Kong exchange, which is not good because Hong Kong had a little holiday the other day. So the fundamentals are, check the bloody news and know what to do. When you look at Bitcoin, you look at all these kind of elements of store of wealth. There's only a few options you've got available to you. If there is a recession, you're going to see everything crumble. You short that element, go for it. Small amount of risk, go for it. But when you look at store of value, would we see an all-time high in gold? Will we see an all-time high in Bitcoin? Who knows? Bitcoin is still volatile. Bitcoin still has that issue where people don't quite understand what it is. And that's what we're here for. Hopefully, by then, there's a lot more trust with Bitcoin and it may see a rise. Not to mention other cryptocurrencies that could have a good store of value longer term. So, that's today's video. Again, check out the link below for Prime XBT. You know, you don't have to use it. I'm just giving it as an option, okay? An option is there. If you want to short the markets, do it and grow your Bitcoin at the same time for store of value. Winner, winner, chicken dinner in my eyes. That's how I see it.